if you believe that on-chain activities will move on from simply like, having the most performant L1s to like, what are the types of businesses that you can build and really captures massive adoption activities on top of those blockchain layers, I think Jupiter is the cleanest expression of that for any application activity that could even happen on Solana.
Hey everyone, welcome to the Level Up Podcast, presented by the Medici Network, the exclusive community for financial institutions to engage with blockchain-native funds and founders. I'm your host, David Breiter.
And I'm your host, Sean Farrell. Before we kick things off, make sure to hit the subscribe button and follow us on Twitter for the latest episodes.
This podcast is for informational purposes only, and nothing herein should be considered financial, legal, tax, or investment advice. The views expressed by our hosts and guests are their own and do not reflect those of the Medici Network, Fundstrat Global Advisors LLC, Finality CP Management LLC, or their respective affiliates. All listeners should consult their own professional advisors as to the legal, tax, financial, or other matters before making any investment decision.
Now, let's get into it.
Hey everyone, welcome back to Level Up. David and I are excited to sit down with Xiao-Xiao J, president of Jupiter. Today, Jupiter is a DeFi app on Solana. They were originally built to be a DEX aggregator, but have since evolved their product strategy to include other ancillary DeFi products, and now have this vision of building, what they fondly refer to as a DeFi super app. The ticker is JUP. It's trading around 16 cents at the time of recording, which equates to a circulating market cap of 570 million. Its fully diluted value is 1.6 billion, which means its float is around 35%. It does generate decent revenues at around 35.4 million in 30-day annualized revenues, and that is, I believe, net of LP fees. So this is revenue that is going to the protocol. And that equates to a circulating market cap to revenue multiple around 16x and a fully diluted market cap to revenue multiple of around 46x. Like I mentioned, they have evolved their product strategy. Their product offerings have become more robust over the years, or I should say over the months since their launch. They do offer, the lion's share of their gross profit is derived from their perpetual futures product, but they still make meaningful revenues off their spot and ultra trading product. They've since launched a liquid staking product from JupSol, also borrow lend product, as well as a couple of other ancillary products, which we're excited to talk a bit about with Xiao-Xiao. Here's an excerpt from their 2025 investor update. And yes, that is a crypto protocol putting out a refined investor update, which I have found to be the most impressive part about engaging with the Jupiter team is that they have developed a rather professionalized investor relations operation, which I think is quite a breath of fresh air within the crypto industry. But anyway, this excerpt demonstrates the growth in usage that the protocol has seen, over the past couple of years, growing in active wallets from 2024 to 2025 by about 80%, from 24 million, give or take, to 43 million. Volumes have grown commensurately. They post around 1.2 trillion in aggregate volumes across spot, perps, prediction markets, and borrow lend. They've also seen decent growth, small growth in TBL, but decent growth in their gross revenue and gross profit, with gross profit growing 50% year over year. Now, revenue, obviously, as most DeFi protocols are subject to, their revenue is quite cyclical and tied to speculation within the crypto ecosystem. And so when prices generally contract, like they have over the past 6 months, one should expect revenues to recede. But, Jupiter revenue has found a steady base, I think, around, just south of 10 million per month. So, that is interesting to note. And here's another excerpt from that investor deck. This breaks down their segmented, sources of gross profit. You can see that perps and spot trading, like I mentioned a couple slides ago, do still capture, they do drive most of their gross profit, most of the profitability for the protocol. But, you can see the long list of products. And I do know that they have a couple of other products that they want to roll out. So it'll be interesting to get Xiao-Xiao's view on, which of these line items, he sees as, potential growth vectors for the protocol. Here you have an excerpt from the same deck showing their growth initiatives over the next year. It's broken down into three parts. The first is categorized as scaling distribution. And It looks like they want to put a lot of emphasis in, adoption of their mobile app, which they just launched in 2025, I believe. So it'll be interesting to get Xiao-Xiao's, some information from him regarding adoption of the mobile app. It's a, driver of stickiness in their app, in a ecosystem, in a industry in which switching costs are rather low. I think something like a mobile app would be an interesting way to, capture more wallet share from DeFi users and perhaps keep them around the app more often. I also think it's interesting that they are wading into prediction markets. I do want to ask Xiao-Xiao about how they are bringing those to market, who their infrastructure market providers are, and what kind of traction they've seen thus far in terms of prediction market volume. They also note on-chain credit, their JupUSD stablecoin products, as well as their RFQ product as potential avenues of growth. They also want to, move more into TradFi, as every DeFi protocol does now. But, in the deck, they note that, one of their initiatives over the coming year will be a stablecoin card integration. I know we've seen a lot of surprising traction amongst stablecoin cards throughout crypto. So perhaps that could be a key source of user growth and revenues for the protocol, but, something that we can ask Xiao-Xiao about. And as every DeFi protocol is trying to do, they do want to, put some effort towards bringing more institutional grade assets on chain. As I do think over time, TVL, I think we all generally agree is, kind of a useless metric when not paired with an assessment of the quality of that TVL and the productivity of that TVL. So hopefully we have some time to talk about RWAs and integrations with TradFi. And, lastly, one of their growth initiatives in the coming year will be JupNet. They are, they call this the Omni-chain aggregation layer. It abstracts away the complexity of where assets live. In other words, it kind of sounds like they're building their own chain on which Jupiter is going to live and will be able to, source liquidity and, trade assets in an omni-chain fashion. So, this is a bit scarce on details. I definitely want to ask Xiao-Xiao about, what this architecture actually looks like and whether it actually might be a scenario in which they, pursue what is, loosely speaking, similar to the Hyperliquid strategy as building their own chain and, actually might be leaving Solana. But I definitely want to unpack that with Xiao-Xiao. This chart here, this is from Blockworks Solana investor relations dashboard, which I think is actually, pretty well put together. And you have their supply schedule and shows the circulating, issued, and total supply. And I think it's interesting to note that this chart shows that they must have had a decent size burn back in late 2024 into 2025, such that their total supply decreased by, we'll call it about 3 billion. And I think that's interesting. This actually contrasts with some of the other metrics that I'm pulling from other data sources such as Artemis, which, have the total supply or the total float still at around 35%. But this looks like float might actually be closer to maybe 40 to 50%. That might necessitate adjusting some of the multiples that, myself and some other analysts are using. So that's something to unpack. And I do want to note, as it pertains to their tokenomics, they do have Jupe buybacks. So there is a value accrual mechanism for said token. They do take 50% of revenues, that is net of LP fees, and buy back the Jupe token. It looks like they are buying anywhere between 3 and in good months 9 million of the Jupe token off the market and burning it. If we look to Jupiter relative to its comps, I do want to note that this multiple for Jupiter, this was not adjusted for some of the nuances that might be present with the total supply dynamic I noted here. But if we look to, its performance or, relative to the comps, actually hasn't done all that bad over the past 30 and 90 days. Certainly over the longer term, it has not fared all that well. In terms of, revenue generation, I'd say it is perhaps in the mid quartiles amongst some of these other, when compared to these other DeFi apps. And then when you go down to, float, I think if we were to adjust this 35% up to closer to 50%, it would compare pretty favorably with the other DeFi apps, say for maybe Aave. And then on the market cap to revenue multiple, I assume that this would actually come down closer to, say, 30 to 35x, which would put it around the median multiple. So I would say it's certainly trading, I would say in line with its peers, not necessarily too rich or too cheap here, but whether it's rich or cheap largely depends on some of the feedback or some of the comments that we get from Xiao-Xiao in terms of growth trajectory for the app. I do want to note that I did receive a significant investment from ParaFi. I believe this took place back in December. ParaFi made a $35 million strategic investment into the Jupe token. They purchased the token at no discount to spot price. I assume that they announced this and engaged directly with the protocol due to liquidity constraints in the open market. But I think that it is quite notable that you had a high profile investor make a pretty sizable investment in Jupiter, and I think this is something worth exploring with Xiao-Xiao. Moving to analyze comp performance, I think a couple of things stand out here. One, certainly, the Jupe token has not done all that well over the past year, down about 70%. I think a lot of this is possibly due to, inflation and emissions contributing to sell pressure. But certainly, I think that the macro has much more to do with this. I also want to note that it's interesting to see that amongst the different DeFi names, you have seen some dispersion emerge. I mean, you have things like Hyperliquid, which of course is no mystery to anyone that it's performed quite well. Morpho has outperformed as well, and Aave it's drawn down as of late, but I guess it has held up a little better than the other DeFi comps. And finally, just to touch upon technicals, not sure there's all that much to discuss in terms of this chart. It has been in a downtrend, that accelerated just prior to the 10-10 sell-off. Does look like it's trying to put in, a little base here since, the beginning of this year. It's kind of consolidated in this, say, 14 to 18 cents range. It is coming up on its downtrend resistance line. So perhaps we see it, put up a little fight and make a mini breakout. But, we'll see. We're definitely, as we get closer to those, revisiting those 10-10 lows, I'm sure, perhaps we'll see some demand at that level. But, I think, similar to a lot of altcoins, Jupe is at this point largely subject to the ebbs and flows of macro. But with that, I'm very excited to chat with Xiao-Xiao Xu. And with that, let's get into it. Welcome back to Level Up. Today we are talking with Xiao-Xiao Xu, president of Jupiter, the owner of perhaps my favorite title in all of crypto, president of an actual gas planet. Xiao-Xiao, how are you? Welcome in.
I'm very good. Excited to be here.
Yeah, so to kick us off, for folks joining us who might be unfamiliar with yourself and Jupiter, could you maybe give folks a bit of a background on yourself, what led you to Jupiter, what you do at Jupiter, and perhaps what Jupiter is?
Yeah, sure. I'm the president at Jupiter. Jupiter is today the largest on-chain super app on Solana. And we can obviously go a lot more deeper into what that means and, where it came from, where we're going. But before the role at Jupiter, I have been for 5 years at KKR, one of the largest private equity firms in the world. I've been a digital operating partner there, leading the digital asset strategy across the firm, but then also working across TMT private equity, managing some of the largest billion-dollar revenue TMT companies that we did. And then, before at KKR, I worked also at the Boston Consulting Group and BCG Digital Ventures, always sort of on the tech and innovation side of things. And I think I got into crypto back in 2016 when I led some of the first projects and ventures at BCG that had anything to do with blockchain. I actually built one of the first blockchain-based diamond asset tracking platforms back then with De Beers. Ethereum didn't still work there, so we had to kind of build it on a private blockchain at the time. That's how I fell down the crypto rabbit hole and stayed sort of very much in touch with the industry. And then when I later joined KKR, I also had the privilege in leading the strategy at KKR, investing into some of the biggest names in the space, including Anchorage. We led the last round of Anchorage, and then in sort of large VC firms like Dragonfly or Ethereum Ventures as well. The question about it's quite a big contrast, right? Going from a KKR to a DeFi platform, Jupiter. I guess the rationale behind that for me was really that I saw throughout the years an acceleration, but then also really an inflection, especially over the last 12 to 24 months, when it comes to actually what I call now on-chain finance, right? Because crypto itself, was obviously started much earlier, but really where I believe crypto is supposed to be, right, is only being shaped now, right? Majority of what we call Web3 and crypto trading today still happens really on centralized venues, centralized exchanges that for me more resemble actually TradFi banks, right, than what the ideals of crypto really are, which is really about permissionlessness and self-custody and really open and transparency. But there was very good reasons why, Coinbase of the world and Binance of the world, when they were formed, could not really be built on chain, right? There were many constraints on technology and infrastructure and regulations simply. And so they had to be built off chain in the way they are. But I think we as an industry really made a lot of progress. And then really in the last, 1 or 2 years, you could see that inflection happening where, the underlying infrastructure L1s, L2s are now so performant that you could actually build, companies like Jupiter with 9 figures of, fees and revenues and tens of millions of wallets, right, of concurrent volumes also happening at the same time. It was simply not possible 3 or 5 years ago, right? And with the sort of improvement of Solana, but then also the emergence of these kind of fully on-chain protocols that could be fully built on blockchain with very, very limited or no off-chain elements at all. This was for me the most exciting part of crypto, and I really saw those accelerating those protocols. I think we had the opportunity to kind of I knew the founders of Jupiter for a while, appreciated what they were doing. They also loved what I was doing at KKR. And so at some point last year, we decided to join forces. And then, the mission is really kind of to take Jupiter from where it was and where it is today really to the next level, which is really bringing it as a flag bearer of on-chain finance to the wider world. And on the other hand side, not only is the infrastructure sort of performant enough, but you also have the emergence of real on-chain businesses such as, Aave, Jupiter, Hyperliquid, really forming that have significant product market fit and serve a lot of volumes and TVL concurrently, globally from day one across the globe. And those protocols are fully built on chain. And I think that's really the big difference to how crypto was before and what now you have the centralized venues really working. And there's a lot of innovation happening on those. There's a lot of adoption, both from institutions as well as users. And this is for me the most exciting part of crypto to really get involved with. And I was excited to kind of work together with the founders of Jupiter, who really bootstrapped Jupiter from day one with no external funding, no VC investment. They built it to one of the largest application on Solana, but then one of the largest on-chain businesses, period. And I think, where I'm really excited is to really help Jupiter take the next level, essentially, right? Grow from the current on-chain super apps status to kind of the default on-chain infrastructure for this new sort of world where I believe majority of financial activities should actually happen on-chain, simply because it is more performant, it is cheaper, it is faster, it settles everything faster. And then it's ultimately also more convenient and a better place to conduct financial activities. And so, that's the mission now at Jupiter. And happy to kind of dive into some of these theses a little bit more.
That's a great introduction. And, for our viewers, we're obviously here and we're focused very much both on the product, the protocol, the business, but also on the token. And can you give us a walkthrough of the core thesis behind Jupiter, but also the investment thesis behind the JUP token?
So I think we can obviously talk more about the business itself, but Jupiter really started, a year ago. Jupiter was simply the largest on-chain trading venue on Solana, right? A vast majority of the spot and perps volumes and market occurred on Solana, occurred on Jupiter. We aggregate simply most of the flows on Solana. But really, by end of 2025, Jupiter has become the most comprehensive on-chain financial platform, right? So today, the business actually operates in, I think, 18 and counting different product lines and categories. Majority of those are already revenue generating. And that will sort of continue, right? On the product and the business side of things, we will grow that sort of on-chain super app. When I talk to some of the sort of more fundamental investors that are friends in the space, when they look at Jupiter, a lot of them tell me where Jupiter is today actually reminds them of what Robinhood was pre-COVID, right? You essentially have a very strong core audience, right? A very loyal and sticky retail customer base. And your offerings are focused on long tail assets, right? In Robinhood's case, it was like meme stocks, right? That really got them famous. And in the case of Jupiter, it was everything that happens essentially on Solana. And a lot of these over the past years have been on longer term assets, but now increasingly also institutional. And then around that sort of core offering, the core audience, Robinhood was really able to kind of build a flywheel of adjacent businesses and product lines that fed into that core engine, right? And essentially created synergies between the core and the sort of newer adjacencies. And so today, when you look at Robinhood is really like a financial super app, right? There's payments in there. They are building their crypto business out as well. There's equities and tokenized stuff as well. And really when you look at Jupiter, it is kind of the default super app on Solana, where you can, the products that we have built represent almost all of the things that you can actually do in DeFi and on-chain on Solana today. We wanted to sort of put that all in one place and really give the most value and the best customer experience, and essentially stitching together the different point solutions that plagued crypto for so long, right? Which ultimately fragments user experience and also fragments liquidity. And so that aggregation theory into a super app, I think, is sort of the core thesis on the product and business side. And then the token itself, of course, is for us sort of the purest, I would say the purest expression of that, fat application thesis, right? It's not, we're moving on from that fat protocol thesis to the fat application thesis. So if you believe that on-chain activities will move on from simply having the most performant L1s to what are the types of businesses that you can build that really captures massive adoption activities on top of those blockchain layers, I think Jupiter is the cleanest expression of that for any application activity that could even happen on Solana. And then over time, I'll go a little bit more into all of crypto and on-chain, because we do have plans also for Omni-chain. So if you believe that, majority of the value creation in the on-chain finance world going forward will not only come from the improvements of the underlying infrastructure, the L1s and L2s simply performing better, but also really, on-chain protocols being able to kind of build to capture a much bigger share of the overall financial world. That, I think, is the cleanest expression that you can have with the Jup token, because anything that can be built, that can be expressed in terms of activities, financial activities and innovation and adoption, user adoption, institutional adoption, actually at a distribution layer, not just on a sort of theoretical, technical layer happening on Solana, Jupiter will provide that, right? We are the distribution layer on Solana. And I can expand a little bit more going forward as well. Over time, obviously, we want to essentially solve all of on-chain finance, not just sort of what happens on Solana. So the Omni-chain execution will also be a big part of our value creation going forward. And so, yeah, I think that's, I would say, a good summary of like what Jupiter, the business, as well as the token currently represents. And then, yeah, in short, essentially like Robinhood, the financial super app, but fully on chain, right? And we're just getting started at the early innings of what the business and the token could be.
So we talked about the super app. I think maybe if we could just unpack the product suite a little more. So, for folks that are unfamiliar, you guys started as I'll say simple swap aggregator. I think you already mentioned that. Have evolved to include perps, which I think comprises the lion's share of your revenue to date. Also have borrow lend as well, which is a bit more nascent. Can you just walk us through each layer of the product suite and perhaps expand on any future innovations that you want to integrate into the platform?
Yeah, we can. Obviously, let's start just on the, where we are today. I think, Jupiter started about 3-4 years ago. The first and the main product was the DEX aggregator, right? And the situation in Solana, like post FTX blow up, right, was that you basically had a lot of different DEXs, right, across Solana, and all of them worked well in some situations and others not, right? So you had like a huge fragmentation of liquidity. And that was essentially the biggest problem. And around that problem, I think the first product of Jupiter was born, the DEX aggregator. We essentially built the routing layer, right, that routed any request or trade request and any user essentially to the best execution and the best price at any given time. And so we basically aggregated all of the different venues and DEXs, right? And that was sort of what Jupiter became known for, and where we essentially found very quickly product market fit and never had to sort of raise external funding. But today, really, like Jupiter has evolved far beyond that, right? So at the beginning of 2025, we were essentially the trading-oriented platform. You mentioned already, like basically spot and perps. We were by far at the largest market share, dominant market share across the Solana ecosystem. But by the end of the year, we really have become this full stack venue for all of on-chain finance on Solana. We launched new businesses around Jupiter Lend, which is the sort of fastest growing on-chain money market on Solana. DTF, the ICO platform studio, our launchpad as well. Prediction market was also launched in 2025, while essentially continuing to kind of improve our core products across spot, DEX aggregation, perps, the largest perp DEX on Solana essentially, and then also like mobile, right, is essentially the mobile wallet. And the idea is that we basically like create deep synergies between those products. So anything that we bring live benefits actually everything else that is already there, and also benefits from the existence of these existing products, because there's a lot of user synergies as well as infrastructure synergies, right? And we can talk a little bit more how that works going forward. But I think that's essentially the core product. So Jupiter Spot, just to give you a sense of scale, right, generated about $900 billion of on-chain spot volume last year. We integrated now also like with a lot of market makers to really offer tighter spreads on blue chip tokens with gasless swaps, right? Essentially like reducing slippage for our users. Jupiter Perps is the largest perp venue on Solana. We had close to 300 billion of perps volume last year. Obviously, our largest sort of revenue and fee generator. Jupiter Mobile is the fastest growing mobile wallet, also in the Solana ecosystem. We started a little bit later than some of the earlier sort of Solana wallets, but definitely like we are now by far the fastest and the cheapest mobile wallet on Solana. And like explosive growth last year, 300% year on year. millions of installs now, and now increasing share of our volumes also going through our mobile, not just desktop. Very important. We built also like portfolio tools for like more professional traders. We are also the largest, one of the largest Solana validators. I think we're now number 2 or 3. Depends on the day, because we also want to own essentially the underlying transaction lending infrastructure. We don't want to outsource that to others. And then on the developer front, I think it's also important. We're not just a retail facing product and company. We also like are the most prolific developer API builders. So we are the home of developers on Solana, right? Major upgrades and rollouts throughout 2025. Over 1,500 essentially integrators into our APIs. And that's something that we also like are sort of rolling out and scaling more. So these are essentially just the sort of more established products. And in 2025, as mentioned, we launched some very exciting new businesses that really extended what we're doing from this like very trading oriented business, right? That's the foundation. But now we also added essentially the more sticky capital, the TVL driven side of business, on-chain money market. We call it Jupiter Lend. That was launched August last year. So just like 4 to 6 months of trading. It is the fastest growing protocol in Solana history, reaching $1 billion of TVL total supply within 8 days of launch, right? Today, close to 2 billion and still growing very quickly, both on the supply and demand side of things. We've also scaled our launch side of launch business, both on the launchpad side of things, as well as the ICO platform. We call it DTF, standing for decentralized token formation, the wallet extension. Prediction markets, a very big growth area for us as well. We were the first to bring both Kalshi as well as Polymarket for the first time to Solana on chain. And both of them are integrated into Jupiter now. So we have the most diverse offering of prediction markets on chain, right, on Solana today. And then the last thing that is quite, I would say, very important for the Solana ecosystem is also we have built essentially the verification layer on Solana, initially as a public good, right? Because Solana was plagued by a lot of meme coin launches. A lot of them were scams. So we essentially, like, if you know the green tick right behind some of the Solana tokens, which basically represents the canonical version of that token, right? Like you might have like 10 different Trump coins, right, on Solana, but the one with the green tick, right, that everyone knows that is the official one. That green tick is that verification is done by Jupiter, right? And that sort of public good we are also now developing into a sort of like more standalone product line with potentially like fees contributing to make the Jup token ultimately also deflationary. We can talk a little bit more about how that works. So I think that's sort of very, like, I could go on and on, but that's sort of a whistle-stop tour of what the product ecosystem of Jupiter today, right? We're not even talking about the things that are coming and are also like very exciting. This is until end of 2025.
And maybe let's talk a little bit about, I know you got into it a bit, but let's talk more about the KPIs. And so like, how many users do you have today and how has that trend been growing? Because I know that, I think one thing is any of the financial businesses, the DeFi businesses, tend to be very cyclical with the market movements. And you've seen great growth and you've launched great products. I mean, the innovation is incredible there. How do you think about, the KPIs evolving in the future? I mean, I'm not asking you to predict the price of Solana, right? But how do you think about the revenue mix changing over time? Do you have any, forecasts or just general guidance on the other product lines and when they could take more share?
Yeah, of course. I mean, like, generally KPIs is because we are an on-chain super app, right? Like we're in so many different. So I think now we're in 18 product lines that are essentially operating in different markets, right? And so KPIs differ between the different product lines, but overall, I would say, some of the top line KPIs I certainly look out for is just like, active wallets, right? Because we're on chain, right? We don't actually, capture, user information, personal user information. Like it's not KYC. So active wallets, similar to other sort of wallet, dexes and wallets, is sort of one of the key adoption metrics. Volume, obviously for the sort of trading side of things, is the key KPI. And then on the newer side of things, money market side of things, it's actually like TVL, which is like more sticky capital. And then obviously, gross revenue, gross profit, I would say are other KPIs. So we step through those, right? Like active wallets, we're like at more than 40 million as of 2025. Unique active wallets, which was roughly 80% increase year on year.
What about monthly transacting?
So on a quarterly basis, it's like obviously it's less. It's in a single millions, right? But like at the overall level, it's like 40 million on the quarter. It's like between 5 and 10. But obviously, like it's because you don't capture sort of user information, it's very hard to kind of say how many, a single user, right, could spin up multiple wallets, right? And so that breakdown is just very difficult. What we can see and the dashboard can see are typically just like number of wallets. They are unique, right? So if the one wallet comes 10 times, that is counted as one unique active wallet, right, in this count. When we go actually into volumes, so trading volumes, right, and if I aggregate spot and perps and prediction markets as well, only like end of last year, 2025, we did over $1.1 trillion of on-chain trading volume, which was a staggering sort of 200% increase year on year. So that really like the volume grew a lot throughout 2025. And then the TVL side of things is we're standing at $2.5 billion, which is obviously not a volume metric. It's a sort of total value locked metric, so more sticky. This represents sort of more of the liquid staking token, our perps LP token, as well as the Jupiter Lens, or the money market side of things. And that also like making us essentially the number one TVL protocol on Solana as well. When you go into sort of more of the financials, the gross revenue, so all of the fees that we essentially take in as the top line of the business, we surpassed $500 million in 2025. And then most of the fees that we get actually on the perp side we actually give back to the liquidity providers, the LPs, because we're an AMM model. So the holder of the JLP tokens gets actually 75% of our perp tokens, of our perps business. And so the gross profit is what actually like remains for the company on the operating basis was at around $180 million last year. Out of that, and then spinning back essentially the value accrual to token holders. So 50% of the on-chain gross profits that we basically retain goes into accumulating the Jup token, right? You can call it a buyback mechanism. And then the remaining basically goes into the development of the team, the tech and infrastructure and marketing essentially. So that's sort of the high level view on the business.
Can you give us a breakdown of that 180 million gross profit based on each segment of the business?
Yeah, sure. So historically speaking, a vast majority of the gross profits and the gross revenues came from the perps business, as expected, right? One of the most profitable sort of business models in crypto. But I think because we have launched so many new products, right, that sort of and these new business lines are growing at an outsized rate compared to the more established business. So essentially that share of the more established products, including perps, is decreasing. So perps as of end of 2024 was around 78% of the overall gross profits, and that reduced to kind of like close to 58% in 2025. And we absolutely expect this trend to continue in 2026 as the existing products continue to scale, and newer products around the stablecoin, prediction markets, JupNet, etc., will create more opportunities to grow.
What do you think is the biggest growth vector for Jupiter out of all those business lines?
I mean, I'd love to have a crystal ball, right? We can talk. I think we should talk a little bit, more in depth about concrete sort of growth levers and vectors going forward. But if I simply think about where are the biggest TAMs, right, in amongst our product lines, I think definitely just on the mobile side of things, I believe like mobile app will be a very big, interface to really onboard net new users, both into Solana as well as into on-chain finance in general. So that's something that we're pushing very, very hard. I'm also a very big believer of on-chain credit, right? I think the opportunity of really like growing TVL on Solana itself, if you just compare, for example, lending protocols on Solana versus lending protocols on EVM, right, which is mainly Aave, you already have like probably a 10-20x difference there. So just catching up to EVM is already like at least a 10x opportunity. And then obviously we all like want to sort of grow the overall pie of on-chain finance period, right? Onboarding actually more TradFi into like this on-chain credit side of on-chain money markets and more also users. So that one we just started a couple months ago with Jupiter Lend and Jupiter USD, which is our stablecoin. I think that will have, that's also a 10x growth opportunity at least. And then finally, I think some of our newer products, I can happy to talk more, is on that we also launched Jupiter Global, which is our essentially on-chain payment stack, right? Today it's kind of a stablecoin card, a product that we already launched. It's available in 200 countries, and we also brought the first ever on-chain QR Pay, right, into the Jupiter Global stack. I believe that will be a very large growth vector of onboarding net new users into our overall on-chain product suite, but then also providing more everyday utility to our existing on-chain users so they can actually spend and use their on-chain assets also in their everyday activities. And then the final big, I would say, at least 10x growth vector is what we call JupNet, which is our Omni-chain execution layer, which the team has been essentially building over the last 1.5 years or so to really solve one of the most complex and I would say most difficult and complex problems in all of crypto, which is omni-chain fragmentation, right? So if you think about us as the biggest super app on Solana, we have very large market share already in most of the markets on Solana, but the ceiling is really like, constrained by whatever assets are already on Solana. What are the tokens on Solana, right? What RWA are tokenized right now on Solana? And most people, if they want to sort of trade natively on EVM or on Bitcoin or Sui or Base, they actually have to use other applications. So we want to solve that, right? That fragmentation of user experience. We want to kind of stitch together the point solutions so the users really don't have to leave our ecosystem to other places. And JupNet is a critical piece to that, to really stitch together. So you don't have to actually use bridges. You can do everything natively on JupNet across chains, and to really like unite and aggregate the liquidity across the different chains. So that's something that will come live over the next couple months, and I think will be a very big sort of growth unlock for both from an infrastructure perspective, but then also for what sort of new applications that we can sort of build on top of JupNet that will further complement the existing super app.
Could you give a brief TLDR on architecturally how JupNet works? Are we talking about building a standalone Jupiter chain here?
Yeah, I think obviously the details I cannot share too much more sort of in detail. There's still like I think design choices, final design choices that the team are sort of going through. But it's not going to be another L1, right? Like we don't think that another L1 is needed or is actually helpful. It will still be on SVM, right? But if you think about it, it's like the closest thing. It's probably like it's probably if you want to classify it, it's more of an app chain, right? So we really develop it to kind of our specification. We want to sort of make something that is much more performant and also like works natively across the other chains possible, but on SVM, right? Like we won't change our underlying sort of coding language. Our developers are all like SVM, Rust developers. And so it's building on that. Maybe analogy is like Hype EVM, right? Is on EVM, but it's an app chain, right? And we're going to do something similar, but in a much more decentralized and permissionless way than Hyperliquid is doing it. More to come. I cannot share too much, but it will be very exciting.
We love a good teasing of a product launch. We talked a little bit about the mobile wallets. I mean, can you tell us about the downloads of that? When exactly did that launch? And how's the download trajectory been? How many downloads do you have now?
So it's still, I would say, compared to a lot of other products, relatively early, right? So mobile, most of our wallet that were active happens on desktop, right? That's where most of the, I would say, trenchers and very crypto Solana native folks and traders use our products. But we also realize and fully recognize, right, that, in order to onboard new people to the sort of all of the benefits of on-chain finance on Solana, like the first vehicle, it really is mobile, right? For people that don't do too much yet, you have to actually offer the most simplified, most powerful, very fast and cheap, right? To kind of onboard those net new users. So Jupiter Mobile is growing very quickly, right? We have over 1 million of total installs as of end of 2025. It doesn't sound a lot in the context of our other numbers, but actually like an increasing share of total volumes, right? It's actually over a proportionate share of volumes, interestingly, is now coming from mobile. And this is where we also like starting to, I think, see a shift in behavior, where traditionally, because, a lot of the previous mobiles apps were maybe not that performant, so people only like did limited sort of trading or like smaller size trading on the mobile, and the bigger and the more complex stuff they did on desktop. Like, I think we're starting to see that shift where, because Jupiter Mobile is now also so performant, it's like 8 to 10 times cheaper than, some of the larger competitors out there, extremely fast as well, right? Like, you don't have the same slippage problems that you still had like 2 years ago. And so we absolutely plan to kind of like double down on the scaling and the adoption of the mobile app. The Jupiter Mobile, the Jupiter Global, right? The payment stack for us is very closely, linked to Jupiter Mobile, because we fully believe once you have everyday payment utility, right, either with QR or with your Visa card, but linked to your stablecoin deposits on Jupiter Global, once those sort of utility habits start to be formed, right, it makes a lot more sense, and that will also further drive adoption of Jupiter Mobile across the world, right? And if you really think about it, right, like DEXs or decentralized venues, they are able to kind of like go global from day one. This is one of the most beautiful models, right? In that, what makes really on-chain finance so beautiful is like you don't have to actually, like a Web2 business, you want to go global, you really have to go country by country, right? You have to do local marketing, you have to do, local operations everywhere. But really, like, beauty of on-chains, like, it goes global day one, right? But what is a little bit different with mobile and payment is that there you again have these kind of like more hyper local elements, right? And we recognize that, and we recognize that the go-to-market has to be slightly different. So we are investing in sort of more hyper local go-to-market strategies for global and payment as well. And fully recognize this is a slightly different game as well, but we want to sort of bring the best of on-chain super app that we have, obviously as the secret superpower to also scale these sort of newer products.
One thing I haven't heard you mention a lot of, and it's interesting because it's, your background at KKR, they're doing a lot, I think, in tokenization of traditional securities. I mean, I'd just be curious generally for what your thoughts are on that, category, and why it's not a bigger focus, or when do you think it's going to be a bigger driver for Web3 businesses overall, and where do you think the opportunities are?
I mean, don't get me wrong, right? Like, we Jupiter today is already the default integration layer for Solana, and a lot of that is actually for large institutions, right? So the likes of Robinhood and Coinbase and even like Uniswap and 1inch, they're all integrated into Jupiter's trading API to kind of offer, Solana and SPL sort of trading to their customers. And that's a very interesting sort of distribution channel for us, strategic partners, right, that are not on Solana native, basically distributing Solana to their users via Jupiter. But then on the tokenization side, also like a lot of the leading asset issuers and tokenization companies today are already like also, integrated into Jupiter. So Ondo, Xdocs, Remora, etc. As soon as they essentially tokenize any real world assets on the Solana chain, Jupiter automatically becomes the main distribution channel, right, for those RWA. And then we're in active conversations with some of the other largest players, including Securitized, etc. So there's a lot more to come there. But I would just say, because of the RWA volumes itself on Solana is still relatively small compared to some of the other stuff that we're already doing around perps and spot crypto native. It's today doesn't show up as much in the historical numbers, but I absolutely believe that sort of it will be one of the growth drivers going forward. I think what you have seen this weekend, right, with the attacks that started in Iran, the Middle East, is that on-chain trading venues, including Jupiter, actually were the only places where you could trade tokenized commodities, including gold and oil and silver, over the weekend while the traditional markets were shut down. So really saw a spike also like on tokenized gold, for example, on our venue. And that I fully, believe will continue, right? There's like different elements that need to still come in place. We need to have actually more market makers and, liquidity providers also for some of these longer tail tokenized RWA assets. Probably higher quality assets need to also be tokenized, right? To really get also match it to sort of higher levels of demand. But I fully expect, right, that more of these tokenized assets will be traded, discovered also on Jupiter. And ultimately, some of these assets also will participate in the on-chain money market side of things. So they can be lent out, they can be put up as collateral, you can borrow against these kind of assets. So there's a lot of exciting plans also coming. But I would say probably it's just like the timelines of, working with some of these like larger players simply takes longer, right? Because there's like more hurdles to clear, they have more things to check. We are extremely fast in what we can build. We have the strongest sort of on-chain engineering team. But of course, if you work with larger institutions, when it comes to tokenization of real world assets, you have to figure out other elements also that are not necessarily directly in our engineering control.
So I think you mentioned, you did just mention tokenized real world assets and trading them on chain over the weekend, forming price discovery around crude before markets open. You said those assets are available to trade on Jupiter. I thought that as of now, for perps at least, is just the majors, right?
Perps, correct. Yeah.
Got it. Is there any effort toward listing more assets on the perpetual future side?
Yes. So I think that the answer there is two steps. Today, with the setup that our perps business has, it's an AMM setup, right? Because we launched the business 3 years ago, the perps business. At the time, AMMs were the main ways to kind of like build perps product, but you actually require liquidity providers, right? And so we build up one of the biggest LP systems, right, around JLP. And so majority of the perps fees actually go to the LP providers, right, to the JLP token holders. And that setup is very much sort of fine-tuned, and it works very, very well for the majors. Less so well for longer tail assets, because you would have to kind of spin up sort of a more smaller liquidity venues with less depth. But this is like, I think the second step of the answer is we're very much aware of that. And JupNet is actually the main answer to that as well, because for us, it didn't make sense to kind of, force fit things that work on an order book perps business very well into an AMM model, right? AMM, we want to sort of keep the strength of the AMM model, the decentralization, the resilience. But for longer tail assets, etc., it makes much more sense to kind of build that onto the sort of specific JupNet app chain that we have in mind. And then on top of JupNet, we will launch, and there's some alpha in here, we will launch order book based, I would say, models and venues as well that much better support also not only long tail assets, but also assets from other ecosystems.
Great. That's helpful. Maybe we shift to talking about the competitive landscape. Could you maybe give folks a sense for how you think about competition and moats and how Jupiter aims to build a moat for themselves?
Yeah, of course. I think because our surface area is now so big, right? 18 different product lines, a lot of them revenue generating, almost like in every market that has size. In on-chain, we are kind of like one of the leading players there. But if you think about it, right, each of these kind of product lines probably operate in different markets and TAMs, right? So each product line therefore also has local competitors, I would say, but most of them are essentially point solutions, right? So on the DEX aggregator side, we're competing with the likes of Titan and DFlow and OKX as well, but we have by far the line share, right? So 80, 90, sometimes 95% of all DEX aggregator volumes go through us, right? So the remaining ones goes to the competitors. And then Jupiter also, like if you look across chains, we are by far the largest DEX aggregator, also like much larger than even the largest sort of EVM DEX aggregators. On the perp side, we compete with the likes of Drift and some of the newer ones around Pacifica. There we also have majority of the market share. On the lending and on the money market side, we compete with the likes of Camino on Solana. But if you really go beyond Solana, also with the likes of Aave ultimately and Morpho over time. And then if you take, for example, our stablecoin business, JupUSD, that was launched. Yes, technically we kind of compete, but we of course also collaborate with other large stablecoin issuers, right? USDC, USDT, Sky, Maple, they all have their stablecoins are listed on our JupLend protocol. But ultimately, there's a healthy sort of just diversity and competition of you want to offer, your users also, alternatives. We are always one to kind of provide the best to our users. So we're not afraid of competition. We always healthy competition ultimately is good for users. On the mobile side, we compete with the likes of Phantom and Solflare. But yeah, I think overall, Solana, it's a big family, but it's also there's, as with every family, there's healthy competition between the siblings and cousins. We're for sure the biggest brother out there in the Solana ecosystem, and I would say that's one dimension of answering the competition question. But if you really think about it, right, because we're still so early in on-chain finance, each of these categories, and therefore the TAMs that they operate in, because we have so much market share, right, in everything we do, simply because of our scale and our adoption, right, we are very quickly always faced with the question of there is a ceiling to that TAM right now, right? The TAM might grow actually quite fast, but today, if we're already 90% in one of the product categories on Solana, right, the question obviously becomes, okay, how do we surpass the ceiling, right? And the answer is, obviously, we talked about some of those, right? We have to expand beyond just Solana. You have to offer really omni-chain liquidity and user experience to our users. We have to, explore also off-chain utility, right? That's the payment angle, right? Neobank, essentially, the stablecoin card, Jupiter Global is our answer to that. And then it's about innovation, right? Simply how can we add sort of newer forms of value to your users, and they're really it's what we launched with prediction markets. We believe it's a very innovative way to kind of express views on the market, right? That fits very well with has a high degree of sort of synergy and overlap with our existing audience. So cross-selling into prediction markets products makes a lot of sense. And in stablecoins, obviously, is very clear. It has such a large TAM, and historically, we are holding hundreds of millions of, USDC on our own pools, right? In JupLend and in JLP. And right now, this basically accrues revenue every day, every month to Circle, right? And it actually, doesn't have to be that way. And that our answer to that essentially is JupUSD, because the underlying TBU yield that is created, every second almost, we want that to accrue to ultimately our users and distribution partners.
So I'd be remiss if I didn't ask one follow-up. I think, focusing on the perp side of your business, obviously that is a big driver of the overall business. Like just drilling down specifically, how do you think about, the competition from other chains like Hype, for example, and like how that has evolved the perps marketplace and like what the best models are? And I guess maybe JupNet could solve that competition problem, but like to get your thoughts.
Yeah, for sure. I think this is the last part of the question about competition, actually, because you essentially have that TAM ceiling, I would say, in a lot of things that we already do. When you think about these kind of newer growth vectors around payments, right? Off-chain to on-chain, bridging, institutional adoption, and then JupNet, Omni-chain liquidity, right? Trying to solve that, if we are successful and actually like crack some of these like very complex problems and expand beyond the existing TAMs, then of course the competitor set also evolves, right? And we're absolutely not afraid of that, right? We want to simply provide the best value and user experience to our users and ecosystem. But it also will mean that we, if we're successful, we will be competing with the likes of Hyperliquid on the Omni-chain side of things, right? Obviously, we have clear ideas of how we will differentiate. But then ultimately, the goal is also centralized exchanges because, just from a philosophical point of view, right? Like we have the highest conviction in like truly decentralized and permissionless, tools to kind of do these financial activities. There's no reason why, hundreds of millions of crypto users should stay on centralized exchanges, right? There should be actually a more healthy, mix between the two. That for sure there will be use cases for centralized alternatives, but we definitely want to continue to grow that share of, decentralized venues as share of overall trading. And then if we're successful on the payment side of things, absolutely, we will also hopefully compete if we're successful with neobanks, right? TradFi, Web2 neobanks. We have great admiration for the likes of Robinhood or Revolut and so on. But where we can collaborate, where we can integrate, we will do so. And where, there will be areas where we compete, we will also do so. But our advantage will always be we are on-chain native, right? We understand on-chain technology better than anyone else. We have the strongest full stack on-chain team out there. We understand what infrastructure needs to be, like how engineering actually work, how product development works on fully on-chain. And that will be always our advantage.
How do you think about moats in DeFi? Do they exist? Are there any DeFi apps in Solana that have a moat?
I think to a degree, right, we probably have the highest moat, but I would say because things are so early as well, right? And the art of the possible still changing so quickly, there is obviously a lot of disruption possible, and we're very aware of that. I would say distribution itself is one of the biggest moats, right? Like people, if you consistently build and ship the best products and you maintain your pace of shipping new products and innovation, that's probably the single biggest moat in on-chain that you have today. And then I would say, obviously, something around culture is also important, because like retaining the best talent, right? So having basically the best people, engineers, founders wanting to work with on your vision, with your vision, right? That is I think a big advantage as well. And over time, it's simply also brand, right? And user experience simply. Like if you have simply the best user experience, simplest onboarding, and then you have the most utility to offer to your users so they don't have to leave, your application, and you do everything anyway. Like we do things decentralized, right? We don't actually take custody of user funds, right? We just simply provide the best tools for users to self-custody and manage their finances. We believe this is the better way to kind of do finance. And then this is essentially some of the modes that we think is that we want to sort of compound on.
That's great. Now, maybe we could just talk a little bit about the governance of the protocol and how that kind of works in the, open source system for Jupiter. There's obviously a protocol. There's a development company. Is there a labs foundation? What are the entities that are kind of involved?
Look, Jupiter's governance is broadly split in two halves, right? From the genesis, right? It's because there were no real investors, right? So the stakeholder groups were really the team and the community, right? And this was encapsulated in the tokenomics of Jupiter itself, where 50% of the tokens are allocated to the discretion of the team and the future sort of team members, and 50% to the community, right? Reflecting the project's view that the team and its community of users and evangelists, this is essentially should be symbiotic. In terms of the legal structure, yes, we have a labs and foundation structure, but the important bit is that there's actually no separate equity value accrual. In fact, the foundation owns the labs. So for example, I don't have no one from the team has any equity. I don't have any equity, only tokens, right? So we really want to really fully align the incentives between the team members as well as the community, right? And further, what programmatically essentially now happens is that 50% of all Jupiter on-chain revenues, as mentioned, already accrue automatically to a token accumulation mechanism. We call it the litter box trust, while the other 50% is applied, as mentioned, towards development of the protocol and ongoing sort of expenses. And so think of it as basically a 50% tax on gross profits that accrues directly to token holders today, while the remainder is used to increase the revenues for the future. And then in terms of the team structure, right, itself, Jupiter operates a fairly flat structure given our, what we call an ecosystem of founders strategy. So most of our product leads across the super app, ecosystem are actually former founders and CEOs themselves. Very often founders of startups that Jupiter over time acquired, or, they merged with Jupiter. And these kind of CEOs or product leads have far more autonomy operating individual business units than your average company, right? And on top of all of this, you also have a broad executive committee of sorts, of which I'm a part of. And then on the community side, right, we have the DAO, right? We used to operate a very high engagement, high volume DAO with many proposals, and consequently had one of the most active DAOs and energized communities in all of crypto. But since mid of last year, we've reduced the volume of proposals to really focus only on high impact proposals to avoid voter fatigue or governance fatigue, right? I think most prominent example of a very high impact vote was the recent DAO vote on essentially net zero emission DAO vote, right? You may have seen it, right? So a very contentious one, very, very, very engaged vote. Ultimately, we decided here to essentially stop and minimize ongoing emissions for the team, which I think was in the interest of a lot of our existing large token holders. And we definitely wanted to essentially keep it that way. I think for recap, the outcome of that latest DAO vote, right, of no net new emissions for the Jup token is that what originally was planned, the third airdrop into the community, it's called the Jupery, that will actually be postponed indefinitely with the snapshot preserved from last month. Team emissions are essentially halted, right, in this market, with all liquidity needs actually absorbed by the Jupiter balance sheet. And finally, the accelerated vesting for some of the other Mercurial stakeholders, where we essentially will buy out their token, right? And they will go straight into the market, and we will absorb essentially any sell pressure straight from the market through buy programs into the market. So this was, for example, one of the very high impact DAO votes, which I think very good for existing token holders and future token holders that you essentially know, right? We heard the feedback that emissions were one of the things that people were concerned about, and we essentially took a very radical approach where we kind of took a step back from both the airdrop perspective as well as the team perspective and any other we essentially minimized the ongoing emissions, because we're so confident that our existing business will continue to sort of grow, and we really want that to also be reflected on the Jup token.
Maybe that's a great transition to talk about the supply dynamics for the token. Can you maybe we step back, talk about the initial distribution, what that allocation looked like, and maybe take us through perhaps all the unlocks and to where we are today in terms of the token supply?
I don't want to go into like too much detail, but originally the token was started with essentially 10 billion of the token of total supply that went into the market. And we did actually one of the largest airdrops in crypto history at the time. I think after us, Hyperliquid came and took the crown. But before that, it was really like the Jup first airdrop, which really created that legend around Jupiter, and then the first like set of extremely loyal token holders and users before actually the product became so ubiquitous. What happened essentially in 2025 is also like we did a lot of focus for the Jup token. So beginning of 2025, we actually burned 30% of the total Jup supply following a DAO vote. To enhance certainty for our holders, we essentially burned 3 billion out of the 10 billion, right? So 30% of the total supply at our annual community summit early last year. We also conducted 2 more airdrops, right, in 24 and 25, right, into the community. And as of today, I think almost close to 50% of the total supply is emitted, right, is in circulating supply. And then as of, I think about a year ago in February in 2025, we actually launched the token accumulation, sort of 50% of on-chain gross profits to accumulate the Jup token from the open market. That is programmatic, and that will continue to happen. And over time, it is becoming, the biggest source of essentially buy demand in the market. Yeah, and then so I would say that's sort of the high level picture, right? So close to 50% in circulating. We've burned 30% of the total supply, both from team and community allocation. And then, as I mentioned, right, the most radical recent step, given the current sort of market we're in, is to kind of essentially minimize the ongoing emissions, right? So the company balance sheet will absorb essentially the team emissions, right? Right now, very, very few team members even want to, sell the token at these sort of depressed token prices. Everyone's extremely committed and focused on sort of just shipping the best products and really not being concerned about the next 3 months or 12 months even, but really build the best possible future for a platform for the next 5 to 10 years. And then and I would say probably on the demand side, the biggest news was also about, I think 3 weeks ago now, we also announced the first strategic investment into the Jup token, right? Jupiter before never raised any external funding, didn't have to, profitable from day one, bootstrapped from the beginning, very proud of this sort of community focus. But I think the founders and the leadership, we really started to realize as we sort of go into some of these newer priorities around institutional adoption, right? Scaling the on-chain money market side of things, the stablecoin and the JupNet, we actually need to reach out into the world, right? We need to have strategic partners that are really long-term aligned to our views of how the world, we want the world to evolve on-chain, right, over the next 5 to 10 years. And then we actually agreed with ParaFi, one of the sort of, blue chip, actually Wall Street-based token investor or on-chain investors, if you want. So they made, we agreed on a $35 million investment into the Jup token, at no discount actually to the spot market, extended lockups, and then warrants that actually trigger at much higher levels than token market today, really as a signal to the market, right, that we want long-term alignment, right? We don't want to have any discounts to the token, right, that misaligns actually token investor and protocol, and really also reflect that long-term conviction that ParaFi essentially has on our super app vision and what it also takes, right, to kind of get there. So the outcome that we want and ParaFi wants is really not a 2x, 3x from where we are today, but really like a 10x, right? Which we believe very much is possible for a token that really, at 500 million of gross revenues trades at 1 billion of FTV right now, right? It's like a 2x revenue multiple. We think is very, very, mispriced and undervalued by the market. But, we're taking the right steps, both on a supply reduction as well as sort of demand generation side of things on the token itself. And obviously none of that would matter if the business would not just continue to kind of like perform and kill it, right? Really on the product and user front. And so, yeah, I would say that's sort of the state of token supply and buy demand. And hopefully, we can welcome sort of more strategic partners on the Jup token side as well. The one thing that I would like to say is probably, because we had such a strong retail DNA, right? And we never actually raised from Silicon Valley or VC throughout the years, very proud of that. Our token holder base initially was very retail focused as well, right? So we had a lot of, of our users actually like holding and staking the token. I think that will continue to be our strength, right? Where we have like this like very highly engaged and loyal customer base that are going through like thick and thin with the product and the token. But over time, I fully believe that we have to also diversify our token holder base, right? We have to reach out, to more professional long-term value investors that really look at fundamentals. And that's why I was so happy to kind of meet David and the Medici team. So very aligned on some of the sort of, views we have on the token market, right? It's in many ways skewed and broken today. And there are like very few players, I believe, that are left, both on the investor and the protocol side, right? That really play the long-term game and really want the best, right? For the industry in the long term, not just sort of extract for the short term. And we certainly, are building towards that, and we want to sort of partner with the right mindset, right sort of mindset of investors or token holders, right? There's no equity, right, in whatever we're doing, so it's all in the token. And then I think the last thing I forgot to mention is, you have supply and you have demand, and one of the key things I believe that is very, very important that we will also do a lot more in 2026 is to experiment and execute more integration of the token into our actual product ecosystem. The clearest example of that, right, already happened last year is actually, the first experiment of integrating the Jup burn or a token, like burning the Jup token into our actually verification process, right? So as I mentioned to you, like any Solana token, right, that actually lists or becomes available on the Solana blockchain has to go through the Jupiter verification process, because we basically provide the green tick, right, on the token. And we essentially introduce in 2025, right, that the Jup token has to be burned, right? A good amount of Jup token has to be burned for any verification process, right? So just through like a few months in 2025, like close to 1 million Jup token was burned in that process. And the success of this initial experiment has really given us the confidence to explore additional methods of token utility in the product suite in 2026. Historically, right, it was a different regulatory environment, right? You had to be very careful what the token can and cannot represent. So like many other protocols, it was, mainly a governance token historically, but with sort of the more sort of friendly regulatory environment, I think it also gave us the encouragement to kind of like much closer embed the token into the utility, right, of our own ecosystem, and then over time essentially representing the growth of the company and the revenue and the cash flow and the adoption, right, of the protocol itself. And as mentioned, the cleanest expression of the fat app thesis on Solana, if you believe Solana will not only survive but succeed and thrive, right? Really, the success of that will have to be measured on the amount of activity and adoption happens on that chain. And Jupiter simply is the most comprehensive and the cleanest expression of that application activity, right, on Solana. And with JupNet, it will also be, will allow us to potentially move out of the Solana beta sort of status, right, into something on its own, right? That's certainly what we're working towards, but that's sort of still to come. So early earnings, a lot more to come. And right now, yeah, I think it's a very interesting time where, we continue to have very strong traction on the business side of things, and the markets is where it is, right? There's a lot of macro FUD, and, the Solana beta is also down, but yeah, it will not stay always like this. And yeah, at a 2x revenue multiple, I think there's not many protocols where you can sort of say the same, right?
Yeah, I think that's great. Maybe we'll just, before we wrap it up, one final question quickly. What are some of the catalysts and risks that people should have on their mind?
We are sort of in a very volatile industry, right? Around crypto and on-chain finance. However, I think that the mitigant of that is simply that we don't represent majority of crypto still happens in centralized venues, right, and centralized market makers. And so the volatility for sure is there, but just the fact that true on-chain finance today is still so tiny compared to Binance, compared to Revolut, right? Maybe you have like single-digit millions of true monthly active users, right, across all of on-chain, across all of the chains, right? A lot of them are already on Jupiter, but it's still a tiny market, right? But that market is already growing very quickly, right? It's gaining share. The DEXs are gaining share versus the SEXs. And then so growing with that market is actually a very good position to be in. You're not protected against volatility within cycles, but overall, I think the direction is very clear that it's probably the most interesting sub-market within crypto, which is like on-chain. I think one of the most repeated risks I've heard from funds and investors is like, you guys are build incredible products, but you do so much at the same time, right? Like, are you not spreading yourselves too thin, right? And so I think it's a concern that we take very seriously. We're experimenting and iterating very quickly how we can sort of scale our own team and culture, right, as the product suite sort of expands. There's definitely no, silver bullet to solve everything. But for sure, this sort of mindset of essentially this ecosystem of founder strategy is a way that has worked very well for us. So we give a lot of autonomy to the product leads, essentially a lot of them former founders and the CEOs. That's a way to sort of scale, but we're definitely also like undertaking a lot of things like cross product, right? Like just on our infrastructure and code base and essentially like level to how we sort of deploy AI to really like create more efficiencies across our entire stack and across our different product. So I think that's spreading ourselves too thin is something that we take very seriously and sort of actively address. Obviously, security is front and center. We've been in the lucky situation, never been hacked, right? Despite our sort of scale. No bad debt, right? No major security incidents. We definitely want to keep it that way. We're working with some of the best sort of on-chain auditors and security firms to consistently sort of like improve the security on all of our products, right? To reduce the attack vectors. And then I think it's, AI itself, right, is something that we have to simply take very seriously, right? Like, that will accelerate potential new entrants and, make it easier for others to also build maybe lower quality code bases with the help of AI. And so for us, it's actually like also how can we proactively deploy AI across all of our products, right? To kind of like bring the best to our users and also create efficiencies for our engineering teams. I would say, yeah, we're quite aware of the sort of risks side of things. I think most of this risks on the sort of market and sort of token mispricing bit, hopefully we're already priced in, right? It's hard for me to imagine how far it can further go. But of course, if Bitcoin still halves from here, like, the Jup token will not be exempt, yeah, for sure. But I just believe also like if, any still fundamentals driven investor look at our, progress and some of our fundamentals. It's just like doesn't make sense if it further sort of drops. It just becomes very, very attractive to I think step in. Then I mean we don't need capital, right? We have very healthy cash flows. That's a very good position to be in. We will continue to kind of like look for great teams and products. We like to acquire great products and teams as well. And bear market is a good time to build and acquire and build partners and build the foundation for inevitably when the next sort of bull market comes, and then maybe some of the fundamentals actually are correctly priced. And so we're looking forward to kind of continue build heads down in this bear market and build the best products on chain out there.
Well, Xiao-Xiao, I think that the disconnect between a lot of these fundamentally sound tokens and the market's pricing has a lot to do with the information gap. And I think, founders and team members like yourself who are doing a much better job at communicating fundamentals and token holder value accrual, I think that goes a long way. So really appreciate you joining us today. Definitely want to give you an opportunity for a last word. If there's anything you missed or want to leave folks with, now's the time.
Yeah, I think like for us, we just keep repeating, I think, two mantras. We're a very product focused company, and, we want to like make it very simple for people to kind of remember what we care about. I think the two mantras for us is nobody ships like Jupiter in the world of on-chain, and then just use Jupiter, right? It's like for whatever you can imagine that on-chain might be able to kind of do, we want you to kind of just try out the latest Jupiter product, right? That's the best way to actually like appreciate the innovation and the hard work that we put in. So I would just encourage you to kind of download the Jupiter mobile app, right? As the window into on-chain. You can see the light of speed at which you can sort of already transfer value, right? You can create a wallet in seconds. You can transfer any amount of value, right, on chain in less than a second, right? It's directly settled, right? You don't need intermediaries. You don't need banks in the middle. Things work on the weekend, after hours, right? You can trade any assets 24/7. We believe this is the better way to kind of like, really connect supply and demand across all assets. And so hopefully more and more things in the world will come on chain. And once they come on chain, there's a very good likelihood they will be discovered and traded on Jupiter. And we want to kind of keep building the best products. And you should try it out with the Jupiter mobile app.
I will do that this afternoon. Xiao-Xiao, really appreciate you joining. Hopefully we can do an update, perhaps further down the line, get an update from you guys on these new product initiatives. Thanks for joining.
Thank you very much.
Thank you, guys. See you soon.
That's a wrap for this episode of Level Up, where liquid token protocols meet the sharpest minds in institutional investing.
If you found value in today's conversation, don't forget to subscribe and share it with your network.
For more deep dives into blockchain's most compelling projects, reach out to us or follow the Medici network for more insights. Until next time, keep leveling up.